In 2018, a trader listed water on the Chicago Mercantile Exchange and then in 2020 introduced a futures market so consumers can factor the cost of water into their investment plans. After a slow start, traders expect the market to grow more strongly in 2023. Some analysts see this as a positive step, allowing market adjustments to provide consumers with the cheapest and most efficient way of buying water. Others disagree, saying that water, like air, should not be commodified as it is a fundamental human right and must be available to all. While there is near consensus on the gravity of the world water crisis, there is fierce disagreement on what needs to be done. Some analysts believe the situation can best be resolved economically by involving the market and commodifying water, a very controversial proposal. Lance Coogan, for example, a trader on the futures market, was aghast to discover several years ago that there was no publicly listed price for water. How on earth are you meant to cost out anything with respect to water, infrastructure, or anything else without knowing the price of water? He asked. It's an essential part of the modern world. We have to know the price of water. In 2018, Coogan moved to fill this gap. We did a deal with Nasdaq and listed something called NQH20 on the Chicago Mercantile Exchange. It's an index giving the average price of volume-weighted water in Southern California, explained Coogan. The value of doing so, he said, is that it provides farmers and other water consumers with a baseline water price. In addition, when there is less water available, the price goes up and the market can be used as a fire alert indicator, letting policymakers, investors, and others know that there is a problem. Listing was only the first step. To trade water, you need futures, Coogan explained. Futures are forward-looking contracts whereby a buyer and a seller agree to exchange a commodity for a fixed price, called a futures price, on a fixed, agreed-on date. Exchange-traded commodities contracts are typically set for crops, such as wheat, and based on harvest expectations that account for risk forecasts. Futures are part of the so-called derivatives market, where futures contracts, options, and other financial instruments are traded. Questions remain over water allocations for industry, agribusiness, and smallholders, cities, and traditional and indigenous peoples. The conflict over water regulation is evident in many nations. In January 2020, Coogan helped list water futures on the Chicago Mercantile Exchange, CME, opening up a new phase of global financial speculation for water. The market got off to a slow start. This is partly because the very nature of water makes it hard to commodify. Unlike gold and oil, water cannot be readily moved or stored. So, while contracts track water prices, the trade is settled in money, not water, so they don't help farmers when there is a serious shortage of water in the real world. Even so, the CME believes the launch was a success. Coogan also sees the difficulties as teething problems and says that in the longer term the futures market will prove to be an essential tool for protecting water consumers. He explains, in March 2019, the water index was $219 and now, August 2022, it's $1,273. That's a lot of volatility. He goes on, if farmers arrange a fixed price for the water they will buy in a year's time, they may be able to reduce costs.